Yeah, I'm done. I give up. Like, what the fuck even happened? The chart made sense to continue down, but apparently, in just fucking stupid case, the entry I had was trash. I don't get it. Let's take a look. So, this is a trader who is clearly quite new and took a trade to go short. And as you can see, it impulsed up very quickly and took him out basically straight away. And now he's upset about it, which is fair enough. He took a loss, but to be upset is the first mistake. To have this break you, to have something that you think should have happened, is the wrong way to go about it. First, let's take a look at the charts because you can see straight away why this happened. Bam. News. It was a news event. That's all it was. That's all that happened there was a news event in the US, the retail sales, and it just made price go up. But let's talk about that because ignoring the fact that that happened, this person placed a trade in hopes that it would go in his direction. He thought he knew what was going on. He thought he knew what was going to happen. And when it didn't play out, he got angry. He wants to quit because he doesn't understand. Now, this is where you should be. When you place a trade, you should have full confidence in yourself as a trader, not full confidence that it will go in your direction. That's totally different. You should have full confidence in your ability to trade, because what this means is you will then be able to execute on that trade and take it and be happy with the result, whether it's a win or a loss. Furthermore, if the same exact trade came up again, you would take it because it fits your plan and you know over time it plays out in your favor. You have that edge. This is something that this person clearly does not have. They do not have that full understanding, so therefore they do not have that confidence. There's that saying, what is it? With competence comes confidence. So when you are more able to do something, you have more faith in yourself to execute. This person clearly does not have faith in themselves and does not have confidence in themselves. They think because they've seen something they've seen before, it should play out in their favor. They're relying more on the market doing what they want it to do rather than them being able to trade what they see. And again, they've taken a loss and not realized that A, that's part of the game, and B, that there is a news event happening. They've even got news marked out on their chart. If we look at the post, they've even got, it's only the future events that are marked right now, but they would have seen that news event right there. But they failed to see that. Yeah, and it just triggered them, and now they want to give up over this one scenario. And this is what it means when people say Forex is hard, because it's moments like this that you have to overcome. It doesn't mean that you are definitely going to go through these processes, because what you should be doing is learning and getting yourself up to a standard of confidence before you even start trading. So many people, and me included, when they first go into trading, they learn, they spend a day looking at videos, charts, whatever, and in that same day or in that same week, they'll start trading. It's how I did it as well. You get so excited about the potential and the possibilities that could happen that you dive in. You don't know what you're doing. You don't have a plan. You don't have that full understanding. You don't really have an understanding because Forex is very it's very, what you call it, almost deceiving, I want to say. So, for example, if you take the general support and resistance, right? Everyone knows what support and resistance is. So if we go to the euro US dollar and we zoom out, right? And we look for general support and resistances. So we could say maybe around this level. Around this level, there's some support and resistance. Let's go to the higher time frame to give us more. I can't see, my camera's in the way. Should we guess? There it is, 4 hours. And we'll draw on here. Here's a great example of some support resistance. It bounces off there, it moves up, moves back down, bounces off, moves down, then moves through up. It's kind of rejecting from that area now. So you've got that. Let's mark that on there. I should do a proper ray. Bear with. just to sort of prove my point, horizontal line. So we could say that there's support and resistance around this area. Where else does price mess around at? Around this area, look, because it tips up, pushes through, then rejects, same again, comes back to this area, pushes through, rejects off this one, comes down, ranges around this one, down, rejects again, pushes down, then moves up. And when you see that, you're like, okay, it rejects from here and you sell here. And look at all this money you could make because it sold from here, it went all the way down here. And then same again, you can sell here and make a little bit of profit here. Same for up here as well, right? And you have this mentality of, because you see it, because it's easy to kind of see these support and resistance areas, you think you have the ability to trade it because it looks so easy. The price came up, rejected, went down. And that's the trick. That's where people lack understanding. They just see this and think that they can trade it. It gets to this area, it has a reject, so they sell. It pushes through, so they buy. And it looks fair enough, right? It rejects, so you sell, you continue. It pushes through, so you buy, and it continued. And it's that simple. But as we all know, it isn't. And that's where everyone gets caught up. And you see this, people see this for the first time and then try and jump into it for themselves straight away. And this is where it catches everyone off guard. And this is why it's so imperative to learn and understand before you trade. If you do not have a plan that you have formulated and you have back tested and you know what you should be looking for in trading, you should not be trading. And this is not a plan where you've seen people do it so you know it works, so you put some things or a checklist together. It's where you yourself have identified these key elements, tested it yourself over a lot of data, at least a year's worth of data, and then you have the confidence that over time that will give you the results. And that's the final little bit. And that's also what gives you so much more confidence, because you have already seen it so many times before. When you've back tested a year's worth of data, you have seen that trade play out, the trade that you're wanting to take or the strategy you're wanting to take play out many times already. And when you're back testing it, you're not seeing the chart in its completeness. I'm not saying here, oh, if I place a buy here, then I know it goes up because it's doing so, right? It's where you replay and then you build up to that point. And then before you know what's going to happen, you place the trade and then you let it play out. And when you've done that so many times and you're starting to get it not just more right than wrong, but the results you're getting are building up as well. So as I said earlier, you're not looking to get 100% because the chart doesn't always, Forex doesn't, the market won't always move in your favor. But it means that either you take more wins than losses, or the amount that you win is always greater than your loss. This is where people talk about risk to reward ratio. So they risk 1%, but their minimum reward that they aim for is 2%. They might not always get that 2%, but that's what they always aim for. Because then if you take 10 trades and you only get a 50% strike rate, you lose 5% because of the 1%, but then you gain 10% because you're aiming for that 2% per trade, right? And if you win 5, then that's 2% per trade, that's 10% overall. So your net profit is 5%, even though you've got a 50% strike rate. And that's the difference. So this is why it's so important to get that understanding. And yeah, going back to having back tested that yourself, when you're used to seeing, okay, there's that time difference because backtesting, obviously you're clicking through, so you're not waiting that same time. You're clicking through a year in a matter of days or weeks. And because you do that, it kind of gives you that false sense of reality. However, when you then start to see the shape of the market take form and you're starting to see some of your trades starting to appear, that gives you that confidence because you've seen it already before. It will never look exactly the same, but you've seen enough data and enough, Yeah, you've just seen enough data. You've seen the market move enough to build up to where you want to place a trade, to recognize when a trade is coming up, right? And that's it. And again, you need to be in a place of when you take a trade, you're happy with the result, win or loss, because you have stuck to your plan, because you know that it's a trade that you would always execute on, regardless of whether you know it'll be a loss or not, because it fits your plan, and over time it will give you the results that you want. So I just wanted to come on and really talk about that, because it's a trap that so many traders, including myself when I first started, I fell into every trap you could possibly do. Like, and they were all my own fault, right? Because I wanted to make it faster. So I was taking all the risks I possibly could and taking all the shortcuts I possibly could. Therefore, it took me a whole lot longer to get there, to get here. So yeah, just a really interesting thing, really. But I really wanted to jump on here and go through my thoughts of that because it's so frustrating in a saddening way because of the potential for it can give a person with their life. It's so frustrating and sad to see people fall at these kind of hurdles and want to quit just because you get that frustration of you think you're getting it and then you trade it and then you lose and lose and lose and lose. But this complex and it seems simple enough, but it isn't. And that's why you shouldn't be thinking you're getting an understanding and then trading. It's you gain the understanding, back test and show that you have the understanding, because that's what it is. When you gain the knowledge and then you're back testing it, you're proving to yourself that you have the knowledge. And all the mistakes that you make while back testing, any trades that you take that you end up feeling not so good about, you can go back and see that, because those are the kinds of trades where they might fit your plan, but sometimes you need to use a bit of discretion and say, actually, I don't like the look of this because, and that's when you start to get intuitive about the market as well. But that only comes with experience, and not the kind of experience where you trade and trade and trade hoping that it will work out in your favor just because you've seen something done before. It's your experience that you're building up on, and you're building up from the understanding that you should come into the market initially. You don't take your driver's test the first time you get into a car, right? You practice driving first, and you take it easy, where you might just drive up and down a road, and then you'll do junctions, and then you do roundabouts or traffic circles, wherever you're from, whatever you call them. And then you build up like that, right? So then you take on more complex tasks. And it's the same with trading. You start small, but unlike driving where you have to practice to drive, you can use demo accounts, of course, but you can do it all theory. Do it all theory and just look past data and see previous patterns or previous structures come up in the market to then see them happening, see them for yourselves, because it's easy when someone else shows you, oh, look, here's a trade I took and this is why. And again, you'll understand everything they say. But trying to spot that for yourself in the market is a whole different thing. And spotting that in the right place and not just taking it because someone said, oh, look, it's a flag here. But if that flag happens inside of a range, it's a ranging market, so it's not going to continue because it's a range. And that's a big bit of information that people miss out on as well. You need to have these structures in the right place of the market. You cannot take a continuation pattern to continue a trend if you're in a ranging market. And that's what I used to fall short on as well, because I didn't understand what a range was. And although you might say, oh, I know what a range is, it's when the market's moving sideways instead of up and down. And I knew that too. But until you have the full understanding of what it actually looks like, and you've seen for yourself, and you understand that, okay, if I look left, it's still in this band, then I can't trade that. Until you've seen that enough times for yourself to have an understanding of what you're seeing when you try to trade, then you're kind of losing hope at that point, because you're trying to see what you want to see. You see a flag, and that means that it's going to go in, and it's going to go up or down, and then range a little bit, then continue. And because you see that, you want to take it because that's what a flag is. But again, if it's in a range but you're refusing to see that, or you don't understand that, or you don't see it, you're just going to take a loss. And the worst thing that can happen is you take that trade and it goes in your favor, because then you think you're right for the right reasons, but at the end of the day, that's probably just probabilities playing out, and it went in your favor just because. But all the other times after that, it might not, and you'll lose more than you'll gain in that sense, because you do not have the right edge. So just wanted to hop on and talk about that, because it's really interesting to see this. No hate to all of this guy. It's tough. Forex is tough for these kind of reasons, but you have to go through emotions and then decide whether you're going to continue or not, and how you're going to continue. In my past YouTube videos, I've just been saying, my market recaps, I've been saying all these mistakes I'm making, and I need to learn from them. But how am I actually doing that? What am I doing to ensure that I learn from them? Because it's easy for me to point it out and say I'm going to improve on it, but unless I actually take action on that, I'm not going to improve on it. I'm going to keep making the same mistakes. So how are you going to learn and move forward is the key question here. But yeah, just thought I'd jump on and share that with you, share my thoughts. Happens to the best of us, happens to the worst of us, actually. The best of us, do the right way first and learn before jumping into the market. But, I can only share my 2 cents. That's all from me. I'll do a market recap soon as well. Yep, and I hope you all have had a wonderful week. It's nice and sunny here in the UK, which is lovely, but I'm going to go enjoy the sun some more, hang up my washing, and party all weekend. No, I'm not going to party all weekend. Got a nice gathering tonight, party tomorrow, a nice chill day on Sunday. Typical Sunday day. That's all from me. Thank you very much. I shall see you in the next video. Goodbye. God bless.